technical market insights, ladies and gentlemen. All you passive investors, active investors, traders, we are going to take a look at what's going on in the stock market on the stock charts. We are going to look at the major ETFs. We are going to do some scans, see if there's any buying opportunities out there. We're going to look at the biggest losers, biggest winners of the day, and see what we got going on. So if you haven't subscribed, subscribe. You don't want to miss what's going on in the charts, because the charts always tell you before the news does, if you haven't noticed yet. So let's dig in. It looks like we got some green today. Dow, SPY, everything from the semiconductor ETF to technology went up. I mean, if we look over here, we got the Dow Jones, the IA up 1%. Triple Q's technology ETF up 1.13%. SMH up 1.15%. SPY up 1.05%. What's actually down is oil, down 0.76%. We got biotech ETF, as ugly as it is up 0.88%. And we got XLU, as ugly as it is up 1.03%. Wow, we had green today. Ladies and gentlemen, where we are overbought, we had green on Friday in the DIA, Dow Jones. Triple Q's finished in red. SMH finished in red. Ladies and gentlemen, you are going to have green days when it's overbought and trending down regardless. This is nothing, as far as my opinion, is an hourly swing. As you can see, these hourly charts have been oversold. Dow's been a little more choppy. Triple Q's have been oversold. They have popped. SMH has been oversold. They have popped. I couldn't tell you how many times I've posted tweet or stock twits. Hourly chart oversold, expected to be green tomorrow. And sure enough, but look how weak that is. That's not a really big rally. I'm hoping the hourly chart actually finishes up more because it should swing to the overbought condition. Okay, so we do have a lot of hourly swings going on, as I've mentioned before in many of my other videos. Weekly charts are going to swing, monthly charts are going to swing, daily charts are going to swing, hourly charts are going to swing. My personal opinion, that's all we're seeing here. Your hourly charts were overbought. They're pulling back in oil, and they are oversold in technology and Dow Jones. And let's see what actually brought Dow Jones up today. Just off the top of my head, I bet it's the biggest losers. Let's see. Pull up Dow Jones. Everything in the Dow Jones holds, which is a total of 30 stocks. Always has been. Nike. Okay, so Nike popped today. Well, this looks like Nike, even though it's under the 200 day, it bounced out of the oversold territory, which, geez, started here. Maybe even. But as always, we average down. So if you would have averaged down throughout all that, even after it dropped under the 200-day moving average, ladies and gentlemen, me selling when it gets under the 200-day moving average, not touching anything under the 200-day moving average, that's my opinion. That's one of my rules. This is all for educational purposes. Just a little disclaimer there. But regardless, you need to know how to manage that position. So you could have, if you had Nike from there, you would have had to average down the entire time. I mean, unless you average down, got out there. However you manage your position, you've got to manage your position to lock in profits. Otherwise, you're going to be compounding losses. It looks like Nike was one of the biggest gainers in the Dow. The Travelers Company, a biggest gainer in the Dow. Ugly chart. I mean, under the 200-day moving average, lower lows, lower highs. Now that is, maybe that's setting the bottom up. Only time will tell. But until it's over the 200-day moving average, I really don't care. Salesforce actually won over the 200-day moving average. Wow, but look at that. But that was the entire market in 2022. Dropped under the 200-day moving average, that dropped 50%. Wow. I mean, if you were dollar cost averaging the whole way down, you might be about even. I don't know what your position is, if any, in Salesforce, but it's over the 200-day moving average. When it's oversold, might have been some possible swing trades there. But let's keep going. Verizon, one of the, let's see, that is 1, 2, 3, 4, the fourth biggest winner in the Dow. Let's take a look at Verizon. Man, this thing is ugly. Goes back and back and back. You've been holding this. I mean, it couldn't hold the 200-day moving average back then. You should have got out. If not, you're down roughly 50%. So if you had 100 grand in that, you're down $50,000. If you had 1,000, you're down 500. If you had 10 grand, you're down $5,000. All because you didn't sell when it dropped under the 200-day moving average. Just saying, it's one of my rules. It kept you from a 50% loss. Definitely keeps you from more losses than it does blocking you from gains. Just saying. Home Depot. Nothing big there. With Goldman Sachs. Can't hold the 200-day. Nothing big there. Intel is, man, just now crossing back up over the 200-day. We got some swings coming available. All right. So that is what was propping the Dow up today, bringing it through its hourly swing trade. My personal opinion, Dow Jones, overbought territory. Actually surprised it actually bounced over the 200-day moving average, but it did. Now here, it may break out to all new highs. I don't know what you guys think. It could pop another 5% and run even more to all-time highs, right? Ooh, all-time highs, let's see. It's 369, so if it break past this, you need 10% to get to all-time highs. But anyway, it might keep going over this overbought condition. But you got to ask yourself, is that something you're willing to risk? So for possible 5% upside, I mean 3%, 7%, possible 15%. What is the path of least resistance? I don't want to even look at fundamentals, what's going on in the world. We're going to at the end of the video though, so stay tuned. Let's look at the weekly chart. I'll tell you what, we're going to go to the monthly chart. That's what I've been looking at on everything. Look at the monthly chart on this. Look at the monthly chart on this. Nothing, in my opinion, has changed. Okay, ladies and gentlemen, as far as the overall market goes, overall ETFs, we're just making hourly swings. The daily chart's going to swing down as the hourly chart swings back and forth. As always, you see green days going down and you see red days going up. All right, well, this is oversold. Would have been a buying opportunity. Of course, you met red days. You met plenty of red days. Man, you only met one green day going down there. Didn't even hit oversold. Went back up. I hope what gets a lot of people on these days is FOMO, fear of missing out. I bet a ton of people rush in to buy calls right here that have a high risk of wiping out your portfolio. You have a high risk of losing every dollar you put in that call because the daily chart's oversold. Your hourly swing's probably done, topping out at the 200-day, or not the 200-day, the 20-day moving average right here. And maybe it goes up a little more, but your highs are probably getting lower and your lows are getting lower. But then again, that's just my opinion. It could rally up. I hope you make a fortune either way you are. Personally, my trading account is cash, and my long-term investment portfolio doesn't change. It stays in bullish stocks, stays making money. Speaking of that, what did BWXT do today? Didn't even look because I know it's just a monster. That's the hourly chart. Looks like it sold off on the hourly. Sold off at the end of the day from 3 to 4. But looks like it almost broke out. Not sweating this chart at all. I have alerts set to alert me when it's in the oversold territory, and I just keep buying. Anyway, your portfolio will do well when you got bullish charts in it, bullish stocks in it. All right, so that's about the end of the overall ETF market update. Everything rallied about 1%. Looked like nothing but an hourly swing. Looked like we're still trending down. I wouldn't expect new highs. I wouldn't expect higher highs. I wouldn't expect higher lows. I could be wrong, but I've been doing this for quite a while, going on 23 years, and I'm pretty confident with my decision to stay back. And we'll get into these oversold bullish charts here in a minute. Real quick, let's look at the biggest winners and biggest losers of the day. Now, how much you want to bet? The biggest winners and the biggest losers are biotech. Watch and pay attention. So if you're trading biotech, just understand. Any day of the week, you can get caught in the biggest winner, but you could also get caught in the biggest loser, and you're probably going to get caught in the biggest loser more than you are the biggest winner. Just saying, been there, done that. That's the first thing I tried to trade. Traded it for years. Actually, thought I was doing pretty well, but I noticed I kept losing money. Don't matter if I kept getting 100% gains, an 80% gain would whitelist that out. Oh man, look, biotech. This is one of the ones we just looked at recently, right? Yeah, up through almost 4,000%, down 60% of that, down 10% of that, and then it popped 85%. But let's get this out of the way a little bit. I mean, this thing is still, from the first time it crossed under the 200-day, it is down 99%. So none of this, if you're a long-term holder in this doesn't mean anything. You're still down a whole lot. If you're buying, preying on the pump and dumps, man, I hope you actually make money, because this is very, very risky. I mean, this thing could be back down to 39 cents, 20 cents in no time. You know what? Let's just do this. I'm going to put it on my favorites, because if I'm a betting man, it's going to be down there. This is the one that came out with the news about one A/B study and some cancer. So let's look. Yeah, so this can't 1B2 study. Okay, you give this 3 months, everybody's going to forget about this, and the next piece of data coming out is going to be so far out, this is going to trickle down to nothing again. That's just my opinion. We'll see if I'm right. Just don't base your trades on what I'm saying. This right here, I can't even tell what's going on in this chart. Let's see how much volume. If I'm assuming not much for the amount, just looks like a pump and dump, run amok, nothing I would be in. Yeah, okay. 22,000 volume on a 11-cent stock. Let me tell you guys something. That's nothing you want to be in. 11-cent stock, 22,000 shares traded. Man, don't want to touch that. I'm just saying. Guys, I'm not trying to knock anybody holding these stocks. If you're holding them, that's fine. But I'm just telling you, these are the type of things I were in originally, like when I first started trading. And they're pump and dumps. They're penny stocks. They're not companies making real money. They're not really good swing trades. All right, it's going to end up wiping out your account. Been there, done that. That's how I know all these are the biggest movers and biggest losers. So it's a technology company up 65% there. Will it end like this one did? Right? This one, man, somebody bought this right around $2. Still ain't got their money back. Lost about 75% of their portfolio. Hopefully they didn't dump a lot of money in it. Just saying. All right, let's look at some of the biggest losers in the market. Man. Other Health Solutions under the 200-day, we're looking at 85%. That's crazy. Man, that would hurt. But you know what? I've been there. I've made those mistakes. Never again. And I'm doing these videos hoping other people don't make the same mistakes. Only reason I'm doing the videos. So my son and the other people asking me questions can see this stuff and not get involved in companies that are just pump and dumps. Put your money to work in real companies, real swing trades. You can do really well. Stop trying to get rich overnight. The biotech company. Who would have thought? Biggest loser. Man. Doesn't look good. I mean, let's just see what the news is, out of curiosity. They lost 66% right then, and it's been losing. Let's see what the news is. So check this out. It says FDA finds substantive review issues and NDA for dry eye disease. Let's read more. So look, this is the type of stuff I used to trade right from the get-go. Right, I would buy FDA approvals coming up 6 to 12 months from the date I purchased it. And sometimes it would pull up, sometimes it would drop like a rock, right? I don't have an FDA calendar in front of me, but if this was out a few more months, you would just be holding, buying, stacking up, buying more, averaging in, and then bam, some news comes out from the FDA months prior to the approval, and you're just planned on building up enough run up to the approval where you can sell before the approval that you make 50, 60%, 100%. Done that so many times over. Then you get in one of these, you're down 80%. You know how many times I turned 2 to 10 and then back to 2? Man, all on biotech, all on speculative stuff, all on pump and dumps. You're just gonna spin your wheels in the market. That's my personal opinion though. It's worth about what you paid for it. So man, look at this dump under the 200-day. And I can't tell you how many times we've seen them dump under the 200-day and go down 90%. That's crazy. All right, that's all just the overall market. Let's take a look at high cap 1000. I got those set over here, filtered. Let's unfilter them. And let's take a look. We got snaps. That's Snap-on. No Snap-on. Oh. It's not the Snap I was thinking of. That's an internet content. I'll go to Snap-on in a minute just because I brought it up. Once again, this is a high cap 1000 company. Man, if you would have got it over the 200-day, you would have rode that wave in your portfolio 276% in a year. Even if you held it until it dropped under the 200-day, 200% 1.4 years. And just lock in your profit because now you're down 85%. People don't understand how important the 200-day moving average is, for me anyway. Maybe not for you. But something like this, Lulu. All right, it did pop above the 200-day moving average. It did a couple swings above the 200-day moving average, which is what we're looking for. Oversold there. Bottom Bollinger Band, good swing. 10% in 13 days. You could have traded that again right here. Oversold. down 6%. Average down, you'd be about 3%, and you'd be up another 12%. So Lulu, I think a lot of retail stocks did good today. Like I said, I don't really follow the fundamentals too much. Stopped doing that a long time ago. I used to trade news. I used to have so many news alerts that drive you crazy. Burlington Coat Factories, Burlington Stores. One of the highest movers, but look at it over time. So if you're excited about this today, I hope you bought yesterday, because that's about the only time you'd be up. I mean, geez, oh Pete's. Under the 200-day right here, can't hold it for crap. You're down 60%. That's crazy. Suave. Shockwave Medical. You guys think we'd be in that one? Nah. Don't look bullish. Don't look like you can really hold the 200-day. There's so many other opportunities out there. Doesn't entice me at all. Let's look at some of the biggest losers. BFS. All right, this stock doesn't even have a 200-day. I'm moving on. One of the second biggest loser. Dropped under the 200-day. That's really all I need to say. I mean, this chart looks so sporadic. Elbit Systems, Industrial. What's the volume on this? I can tell the volume's probably stupid. But yeah, 109,000. I thought I had it. Okay, I don't have it filtered. That's why. I'm gonna say I usually don't look at anything under 200,000. It's not enough volume for me. And guys, one thing you gotta understand too: stocks with low volume. You know, whales with millions of dollars and billions of dollars. You know how long it would take them to get in and out of a stock like that? They usually don't mess with them. You need high volume companies. Moderna. I thought I'd seen some news on them today in my feed. Let's see what it was. Yeah, after providing statement on expected COVID-19 vaccine sales for 2023. Who would have thought their vaccine sales would have fell? Just saying. You would have got out of that when it crossed under the 200-day. You would have saved yourself about a 42% loss. This right here, I mean, this is a nice looking chart. I like this chart. I think we actually went over this yesterday because it was one of the biggest losers yesterday. No, would have been yesterday. Would have been Friday. Take a look. But I even said overbought. That's when you lock in profits. We would have bought here. The high cap 1000 is what it came up on our oversold bullish stock charts. 17% in 17 days. Those are the kind of trades we like to make. Oh, and then we go into this garbage under the 200-day. So nothing we are seeing is unexpected. All right, let's filter this. Let's see what kind of stocks are out there in the scans. High cap 1000, bullish. So I went ahead and switch the scans up a little bit. We were just scanning for bullish, and then filtering the stochastics, I went ahead and just put oversold in there. So now everything we pull up in the high cap right here is going to be bullish and oversold. Oversold. I think I got 25 or 30 just to get a little bit ahead, just in case it doesn't really dip into the under the 20. I still want to see it. Might not buy it, but I want to see it. Not enticing. All right, I'll prefer to be much closer to the bottom Bollinger Band. This day closed lower than the high. You would know that if you've seen the stock chart video. This chart I like because it broke out. So it broke out right about here. Okay. What I don't like about it, I like that it's close to overbought or oversold. Not oversold enough, and it's not close to. I see a lower Bollinger Band, and I see a 50-day moving average. My personal opinion, I work hard for my money. That's not a buying opportunity, especially when everything market wise, it's still overbought. Okay, not really jumping. It's not. I'm not feeling that froggy to leap. Let's go into, now I went ahead and added, I usually only do high cap 1000. I went ahead and went to the US common stocks, which is every stock out there. So it's bullish charts, oversold, bare minimum 200,000 volume, which is not a lot. Let's see what we got. Same thing that came up in the high cap we just talked about. UROY. See, what I want you guys to do is get to the point where you just look at this and say no. Okay? That's not enticing to me. Not at all. It may take a while for you to say why, but I want to see previous swings. Now, this could rally up another 20%, honestly, to the previous highs. For one, it's a $2 stock, I just noticed. That's why I don't mess with US common stocks. I don't like trading $2 stocks. A lot of people do. Not me. This was oversold. This is AMRX. So a lot of these companies, this is a pharmaceutical company. So you know, personal opinion, don't touch them. CRS. It's oversold. Chart kind of bullish. I'm gonna say no go. EU, $3 stock. I'm gonna say no go. What in the world is that? Say no go. It's a coal company. Not close enough to the bottom Bollinger Band. It is at a 9 stochastics. I'm gonna say no go. Talkspace Technology, not close to a high enough swing. You think a bullish chart right there, but then when you zoom out, you see there's got to be problems with this company. Now, you can go check the PE, check the dividend. If you follow me in previous videos, you know, got to be making money. Needs to pay me something. That's a $2 stock. No go. No go. No go. No go. No go. No go. There is nothing out there in the entire market that is enticing to me as far as my scams go. Now, you guys might trade 16 different things tomorrow. Might even buy some calls in something. You might have bought calls today in the overall market. I hope you all make a killing. Not for me. Uranium is the only, this was funny. So I looked at this a little earlier. Uranium is the only bullish ETF out there that's oversold. So I was curious, is there any leveraged ETF versions of uranium? Because when I trade ETFs, I want leverage. Now this version right here, if you started buying in and scaling down, it might even drop to the 50, it could even drop lower. But if it reaches back up to the previous highs, you're talking 17% swing. You got to keep getting your average low if it keeps going down. But are there any leverage ETFs? So this is one of the biggest leveraged ETFs out there, the Rexion ETFs. So I came across this and it was kind of enticing, HCMT. So they are a leverage and inverse ETFs, and they try to swing trade based on whatever buy signal and sell signal they have set up. I don't know what it is, but I'm like, that's interesting. If they're accurate, that would be something I like. They look like the overall freaking market. Like, how active are they? What kind of buy signals do they got? That's garbage. Whoever is tactically swinging this, tactical enhance, they need to let go. Because that is horrible performance. You should be beating the market, not looking exactly like the market. It looks exactly like the entire market. I don't think they're really doing nothing. They just named it something special and thought it would be special. It's garbage. All right, so real quick, that's the overall market. That's the scans. That's the biggest gainers and losers. One thing to keep in mind, because no matter what the charts say, you always think about fundamentals, but I always trade by the chart and invest by the chart. Fundamentals. We're stretched out with Ukraine. We left a ton of weapons in Afghanistan. We're stressed out with Israel now. And that could explode so quickly. Israel isn't going to stop. They're going to wipe Hamas out, okay? Think about something else. We're stretched out in those two areas. If I'm China, it's time to take Taiwan. Just saying. Be very careful what's going on around the world. You don't get your portfolio wiped out. And I'm going to tell you, if something major does happen and the market drops, a couple things that could happen. All crap could hit the fan. Stock market could be no longer, and your money is the biggest, not close to any of your concerns, okay? So you want to make sure you have income pumping into your account to keep your cost average low. If you're a dollar cost average type person, you're averaging every week, you're going to do that anyway. But I'm just telling you, if something major happens, to me, the charts always talk before the news even happens. I don't know how, I don't know why. I don't know if it's the huge whales of elites getting out prior and setting these higher highs. You can understand, if you're dumping billions of dollars, you're not going to dump it at once. All right, you set the trends in the market. All right, and usually by the time you're out, it's about halfway the pullback, and then the news hits. I'm just saying, pay attention. Fundamentals I don't usually pay attention to until I made a decision to invest in a bullish stock. Do I focus on the fundamentals? But you should always pay attention to what's going on in the world. This breaks out with Israel and Hamas and the freaking Mideast. Oil's going up, inflation's going up, rates are going up, and then China is thinking, do we try to take Taiwan by votes, or do we just take it by force and show our dominance in the world with a weak administration of America? If you haven't subscribed yet, subscribe, share, hit like. I'm out.